Shall we start? We'll wait for 1 second. Pratik, you are on mute.
Wait for 30 seconds. Participants are joining. So you can start now.
Good morning, members, and welcome to the 4th study circle meeting for the year 2022 on a hot topic of Maha Rera. Before we start the session, let us raise for our institute motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनाद्यति कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, members. As we know that this Maha Rera, which has come into existence from 1st of May 2017, and the key objects of the act are to ensure transparency, efficiency in real estate sectors in regard to the sale of plots, apartments, buildings, or real estates, and to protect the interest of consumer in the real estate sectors. So what are the various changes or what are the recent developments which has happened in these sectors? For that, we have an eminent faculty, CA Rakesh Oza ji. Not taking much of your time, I will request Jawad Vasa to briefly introduce you.
Thank you, Vijay Bhai, and welcome to all on the 4th meeting of BCSE of 2022. CA Rakesh Oza ji is a partner at NMAH and Company. His professional career spans 13 plus years in the field of tax planning, due diligence, and debt syndication for real estate developers. He has started his career with Hari Bhakti and Company Chartered Accountant. Later on, focused into real estate financing and lead team as VP Finance with K Consultants. In his last assignment, he has shouldered the role of CFO with Romel Group, renowned real estate house in Mumbai. He has experienced the complete life cycle of project from conception, structuring, financing, accounting, tax planning to compliance requirement of other allied laws, as well as technical aspects of real estate projects. He has developed passion for project analysis and critical monitoring and serving the investor lender in taking holistic view of project. His core competency and practical knowledge gained in real estate industry has led to financial technical closure of many large-scale projects. With this brief introduction, I request Vijay ji to take over the chat.
Now we request our speaker of the day to start his session.
Thank you, Vijay Bhai. Thank you, Jawad Shah, for giving me this opportunity to present before the members.
Yes, sir.
I am audible to everyone?
Yeah.
Yeah.
Screen is visible?
Yeah, sir. It is not in PPT mode. I think it is getting loaded. Yeah, now it is visible.
Okay. Good morning, friends.
Good morning.
Today's topic we have it, the recent development and compliance aspect for CS under the Maha Rera. Maha Rera have been there for almost 4 to 5 years, and we have done the many compliances for the years together. But looking at the scenario change which has done for the last several years, what are the changes which has come and where the CS can play a critical role in terms of any sort of a development with respect to real estate project. So today's our agenda entirely will be on the where CS can play a role and in which manner CS need to look at the compliances, not only as a number game, but also as a compliance and the avenues available for the CS. So we start with a presentation. As we see, under a RERA, like any other law, that it is a RERA has an act, rules and regulations notified. RERA from time to time issues a circulars and orders. Circulars and orders are clarificatory in nature, whereas the rules and the act is notified. So whenever we are reading the act, we need to look at the rules, relevant rules with respect to particular aspect of an development or particular compliance of a RERA. Though we see that the RERA is a central law which has been enacted by the central government, but the implementation responsibility of that particular law has been given to the various states. So every state like Maharashtra, Andhra, or say any other state has their own rule, because the land as per se is a subject matter of a state. So every state, whenever they are dealing, there is a certain things which are specifically given the powers which has been given to the states to make it out the rules, regulations for the any matter related to the land. So looking at that aspect, every state has made it out the rules and the regulations to implement a law. So from what we see, if we are complying in a particular state of Maharashtra, we need to look at the rules which are framed under the state of Maharashtra. They may not be the same, which is if we are taking any project in a state of either the Gujarat or any other states, then we need to follow the rules and regulation with respect to that particular state. So it is not so any states which are rules which are framed in the Maharashtra will be same applicable for the projects which are there in the Gujarat also. So it is a specific state to state rules and regulations need to be followed. RERA many times issues the circulars on a particular aspect which are where the clarification is needed by the industry or the clarification needed by the all stakeholders. So it is a RERA which provides the circulars and orders from time to time that need to be followed while implementing or looking at an implementation compliance aspect of a RERA. Orders are certain times to specific condition to conditions, looking at the compliances, looking at the timelines, and looking at a situation. RERA issues an order in respect of what instruction need to be followed in particular cases or particular aspect of a compliance or implementation of a law. So with this brief structure, we start with our presentation. Why RERA? So many of us knows RERA need to be followed, RERA need to be followed for any sort of a project. But why? So what we see, it puts under section 3, it puts restrictions on the promoters. Without registration, promoter can't do any sort of an advertisement or marketing of a project or sell or take a booking of a project in any manner for any real estate project or any part of the real estate project. So when we are looking at what are the restrictions, so this promoter if can't do, can't sell, can't book, take a booking in a project, it is very difficult for anyone to get it out. What is the entire object of the any sort of a development of a real estate project is going to be ultimately sale. So if he is not able to make a sale, he is not able to advertise it, it is a useless effort for the promoter to go ahead with the development of any sort of a development. So Rera, when they have taken the charge of implementing it, they have made it out very clear that a promoter can't do any sort of an advertising or marketing of any project if you want to sell. So now the question works out, if anything which is there for a sale, the Rera need to be complied. So it is when the restrictions have been put it on the promoter in terms of either advertising, marketing, any sort of a thing, then the Rera comes into the picture. Otherwise, there is no requirement of a Rera till 2017, before 2017. When we analyze the definition of Section 3 compliances, it says that any real estate project or part of it, even if I am selling out any one unit in the particular project, or it's like a redevelopment projects or any sort of a development project where even a single unit need to be or in 1 square feet need to be sold, it attracts the Rera provision, it attracts the Rera compliances. Rera has provided certain exemptions and limitations in terms of compliances that we see on the coming slide. So what are the exemptions which has been provided under Section 3 in terms of compliances with respect to registration? If we see the compliances, the OC, the projects which has received the OC before 1st May 2017, which is an implementation date of a Rera of a Section 3. So Section 3 is getting implemented on 1st May 2017. So any project which has received an OC before 1st May 2017 is exempt to get a registration. Or second exemption is based on the size of a project. Size of a project which we see the land area where the land area going to be developed is less than 500 square meter, or there are only 8 apartments in a project, considering all phases of a project, then that project need not be registered. Third, the real estate project which do not have any sale component or any sale allotment. So even though there is a development by the promoter, even though there is a construction by the promoter, but project did not materialize any sort of a sale allotment. For take an example, any sort of a redevelopment project is there, where the entire sale area, entire area, which is a new area getting generated, it is given to the members as in lieu of their existing area. If that area is not getting sold, then in that scenario, the project need not get registered for. So these are the Section 3 compliances. Why Rera, we are understanding of why Rera come into the picture. So if the project has a sale component, then definitely that project need to go for a Rera registration or go for a Rera compliances per se. When we are understanding the project or the compliances, we need to understand basically what is going to be a real estate development in terms of which type of developments are there, where we can identify what is going to be compliances or this type of projects are going to attract a Rera compliances. So when we look at the compliances, it is generally in real estate terms, the development works out in the manner like in plotted developments, where only the landowner is coming out and they do the plotting they do the basic infrastructure development there, like an electricity, like a water facility on the plot, getting it out, roads, and development of infrastructures like gating or the compound wall, and development of an entire land parcel into the small plots to develop it out in a future or with the current requirement. So that is the plotted development. So if that plotted developments, I am doing it out only plotting without an object of sale, then it do not require mostly Rera compliances. That is the second type of real estate development is Greenfield Development. In a Greenfield Development, it is generally led by the builder-owned land development. Builder acquires a land, then builder makes it out a land development himself. In the Greenfield Development, there is one more development which is joint development with the landlord, where the landlord is coming together with the builder and joining hands with the builder for the development of a project. And there are the third category is the redevelopments. Redevelopment might be either a self-redevelopment, where the societies or existing members or existing owners come together and do the development. There is a builder-led development, which is a traditionally followed for all sort of redevelopments, where the builder is taking a lead and providing the redevelopment solutions to the existing members or existing owners. In case of an SRA or the slums, where the authority of a land or the ownership of land is with the state government or SRA, slum redevelopment authorities. And in that scenario, the redevelopment is taken place with the help of an SRA and the slum dwellers which are occupying the slums and the developer or the promoter. There is a Maha in same sort of an development, Maha, where the Maha owned lands are there. Maha has given the land on the premium or the lease basis, and that redevelopment is taking place. These developments are called as a Maha redevelopment. So when we are looking at all sort of a development, the only question remains it out. When I am going to comply for, or when is the requirement to get complied for the particular Rera. So when we look at a plotted development or a greenfield development or any sort of a redevelopment, the three stakeholders which we need to always identify: who is a landowner, who is a developer, who is a either project manager or developer. In this all scenarios, who is going to be a promoter? Because we see that there is a landowner, there is a developer, there is a project manager, there is a project allottees. But in all scenarios, when we look at who is going to be a promoter, if we see what we have discussed it out in a previous slide, it is a plotted development. If we say the plotted development, the landowner is coming together and asking a developer to do a plotting, do a basic infrastructure development. And in that scenario, based on agreement, based on the mutual understanding, either a landowner and or the developer of an infrastructure who is developing a plot or who is taking a permissions of a plotting is going to be termed as a promoter. In a greenfield development, builder-owned land development, builder is acquiring, builder is doing everything, builder is taking care of builder is taking care of construction, making deliveries available to the ultimate allottees. So in a greenfield development, builder-owned greenfield land development, builder or the promoter is going to be, builder is going to be a promoter. In case of a joint development with a landlord, builder as well as the joint developer or the landowner developer is going to be a promoter. So Rera has categorized in sort of a joint development, the promoter is in the two different categories. One is going to be a landowner promoter, and in terms of a promoter developer promoter. So landowner promoter means who owns a land in a case of a joint development of a project, a greenfield project. And the builder developer promoter is going to be the main promoter who is typically acting with a landowner. So in that scenario, based on the responsibilities which are shared between a landowner and the developer, it's going to will be classified as a promoter. In case of an redevelopment cases, in case of a self-redevelopment where the society is coming together forward and all members are coming together forward, who is going to be a promoter is the society, because society is ultimately responsible for sale and development. And with respect to the any allotment which has been done in the self-redevelopment cases, the societies will be called as a promoter. Builder-led redevelopment, definitely. In case of a builder-led redevelopment, promoter is going to be a builder, because builder is ultimately responsible for construction as well as allotment with the allottees. In case of an SRA redevelopment, yes, SRA redevelopment, as with respect to sale area which is concerned, promoter or developer is going to be a promoter along with an SRA, because right to the SRA, slum developer, is given by the authority. So in that scenario, SRA need to be a co-promoter with a developer or a promoter. Same is the case with the Maha redevelopment. Maha has to be there as a co-promoter along with a developer in case of a Maha sort of a redevelopment. Many times what we have seen, not only this type of category, but the project manager or development managers are coming into the picture. Like what we see DM model, which is generally famous in sort of an where the redevelopments or the greenfield developments are failed, and someone who is financially strong or who is strong in terms of a project development, they have a brand value. That sort of promoters are joining hand with an existing landowners or existing promoters and bailing out the projects from the current state of development which is there. So in that sort of a development, the term which is known as a project manager or development manager is coming into the picture, and that promoter, project manager or developer manager, is also termed as a promoter. What we have seen in a recent case of a Nirmal Lifestyle, which has been held in March 2021, Rera Authority has held at that the DM partner is also be called as a promoter, because he entirely works out, control the entire finance as well as the construction of a project, and without his consent or without his action, the project can't be completed or delivered in time. So where the DM partner, in case of Nirmal Lifestyle, Shapurji Palanji was a DM partner, and Rera has held the Shapurji Palanji to be one of a promoter there, and ask them to register on the Rera website and do the needful, all compliances and everything. So whenever we are looking at any sort of development projects, it is either as a CA or as any stakeholder associated or a professional associated with the project, we need to first identify are the compliance or the stakeholder for whom we are working, he is called as or classified as a promoter under the definitions of Rera, under the Act of Rera. If yes, then definitely all compliance is going to be made by that particular promoter, the way we were going to be in the forwarding slides. Yes, if we say the person or the stakeholder is termed as a promoter, then the all compliance is going to start, because under a Rera, any provision, anything which is related to the promoter have been complied, or the obligations have been put on the promoters in terms of all compliances. So unless and until you are termed as a promoter, there are no obligations from the project compliances perspective. Yes, as an allottee, as a broker, as another stakeholder, there are other compliances. But as far as the main compliances which relates to the project development is only cast upon the promoter, because he is ultimately responsible for the development of a project and the delivery of a project. So first compliance which start from the registration. Registration has been given under the section, the scope of registration has been defined under this section 4 of a Rera, where it says that every promoter need to make an application for registration of a project. The landowner promoter or the developer promoter. When we say the landowner promoter, who is a landowner in this case of a joint development, who is also acting as a active promoter in terms of an project development, he provides his consent and take it out either an area share or in terms of either take it out a revenue share from the main developer promoter and do the development of a project. So when we say the landowner promoter, what are the responsibility? Do he shoulder the same responsibility what the developer promoter says? Yes, that need to be check it out based on the understanding, based on the DA, based on the documents which has been executed between the landowner promoter and the developer promoter. So if there is a development responsibility is entirely taken and clearly mention it out by the developer promoter, then in that scenario, landowner need not be responsible for the any sort of a delay or something, but that need to be clearly specified. In terms of there is a silent on this particular aspect in terms of any document executed between a landowner promoter and the developer promoter. In that scenario, definitely this may arise a dispute later on in terms of any non-compliances which is seen at a later point of time of project development. So that need to be, whenever as a CA or professional we are engaged with any sort of a development, we should make it clear either from a landowner promoter's perspective or from the developer promoter perspective. The document should clearly specify, yes, what are the obligations as a promoter with respect to project development. I am, as in sometimes the investors or sometimes the investors are involved. Only the certain parties are involved as an investor, and they took the key responsibility of providing a finance. And they specified in terms of their joint development agreement or joint sort of an MOU or any sort of an agreement between themselves, and they take the responsibility. I will be providing a finance and everything. Responsibility of construction will be of a developer promoter. In that scenario, if that finance party or the financing party is coming as a finance provider and shoulder the responsibility of providing a finance, and if they fails to do that, in that scenario, even that finance party or the financing partner, he will be termed as a promoter, and he will be held responsible for the project development and project progress with respect to the allottees under the provisions of Rera. So when we look at a landowner promoter, in terms of if we identify landowner promoter as a promoter, and we look at that, there are two types of understanding with the landowner promoter, either an area share or the revenue share. In terms of an area share, how it is going to be? What are the obligations? Whatever the area I am getting it out as a landowner promoter, do I need to take a separate registration or the only single registration will do? What will be my role or scenario in terms of a revenue share? Do I need to take a registration, or it will be the single registration which is taken by the developer promoter will do? These answers can be only taken by how we are structuring, because practically we can have in case of an area share, we can have a 2 registration, but practically it is not possible. Technically it is possible, practically it is not possible, because any project will have, if you have 2 numbers in that scenario, if you have 2 numbers in that scenario, the compliances, any sort of complaints, anything will be a bit difficult in terms of meeting it out with respect to allottees which are there for the projects. So landowner promoter and everything, landowner promoter need to make sure that they comply with or they synchronize with the developer promoter in terms of registering the project and making it out area share and everything more visible in terms of only the one project along entirely on the Rera portal. So in terms of a revenue share, this is no such requirement. In terms of a revenue share, the only promoter need to have it out the cost which is given or the revenue share which has been given to the promoter need to be mentioned as a part of a project cost, because ultimately anything paid as a part of a land or the cost towards a land acquisition is need to be worked it out and provided as a cost of construction. So once the cost of construction provided the cost of acquisition of land, sorry. So that acquisition of land need to be there as a part of a project cost, and that will be clearly mentioned in the budget or the cost for the project, and that can be paid to the landowner promoter. When we are moving further with respect to the section 4, there is a requirement of Rera account. There is a requirement of maintaining a Rera account. Every promoter who shall open the Rera account with a scheduled bank to deposit either 70% or 100% of a sale proceeds. 70% in a case or scenarios where the project is having the adequate cash flow to meet the balance cost. In case ongoing project doesn't have a surplus cash or surplus cash flow to meet the balance cost, the entire 100% of sale proceeds need to be deposited into the Rera account. So that is a tricky situation that every time the assessment need to be make it out at any given point of time. How much is at what point of time the only 70% need to be deposited into the Rera account, or there is a requirement of a promoter to transfer it out entirely 100% sale proceed into the Rera account. That depends on the day when you are making an assessment as a CA or as a professional. What is the cost remains and what is my revenue? Because some cost is on actual basis, and sometimes the projected revenue is on the ready rector value, which is tend to be lesser than the actual market value of ultimately sale realization. So that need to be taken care and checked into the when we are issuing the certificates and everything. Use of proceeds for meeting the land and construction cost. So on the from Rera account, what we can see, the only uses which has been allowed to meet the land and construction costs of a project. So what is the land and construction cost of a project is a big question which we can see when we are referring to the CA certificates and its content in terms of, we will discuss in detail, because this is the one point where the differs and the opinions are differing in terms of what is the land cost, allowed land cost, is there, and there is, if there is no land cost, that can be any presumed or deemed land cost can be taken or not, any sort of a construction cost, what are the components allowed, is the salary or admin expenses allowed as a construction cost, marketing expenses are allowed as a construction cost, because Rera, Maha, certain times Rera, Maha differs on this aspect with the other states. Other states do allow the marketing cost as a part of a construction cost, but Maha doesn't allow. So uses, when we say the uses from the Rera account, it need to be critically looked at in terms of what is allowed and what is not allowed with respect to the uses of fund. So that is that the guidelines and that circulars have been provided by Maha in detail in terms of looking at the what is termed as a cost, allowed cost, and CA need to check it out on that particular aspect very well. Withdrawal post obtaining architect, engineers, and CA certificates. So any withdrawal which is there from the day one, which has been specified by Maha under section 4, that any withdrawal need to be supported by form 1, 2, and 3 from the respective professional architect, engineers, and CA while making a withdrawal from the Rera designated account. And this withdrawal has to be in proportion to the percentage of completion. Percentage of completion will be purely based on the budget which has been provided initially for the construction of a project, Rera budget, and the percentage of completion which has been achieved on a specific date or a specific month or specific quarter per se. So withdrawal, if there is a 20% completion has been taken, in that scenario, the 20% amount can be withdrawn from that 70% account. Amount equivalent to the 20% of the project completion can be withdrawn from the 70% account. What we see, or say we can say the Rera account. In terms of moving forward, apart from the first one, after the project is getting registered, as a professional, we need to involve and we need to look at what are the documents getting executed. And those documents and which has been executed by the promoters are in compliance with the Rera law or not. So there is a start with the allotment letters or agreement to sale. If say agreement and allotment letters need to be specifying the same requirement of Rera provisions, what we are looking into respective different sections. We should mention only those amenities, specifications of a unit need to be provided or allotted to the allottees, which we are actually providing or which is as per the plan. If there is a deviation, then it will be creating a point of dispute in the future and will have repercussions on the promoters in terms of a financial liability while going forward. So when we look at the section 13, which talks about an agreement to sell and collection from a allottees of a project. So no more than 10% collection should be done before executing an agreement to sell. If the promoter is executing and taking out any sort of an booking, generally it is the practice 20%, 25%, 30%, but which has been now recently post implementation whereas change, and Rera do restrict that booking up to 10% of an entire flat cost or the unit cost. So before execution of an agreement to sell, the promoter is not allowed to take it out any booking more than the 10% of an value of an unit or the apartment which is going to be allotted to the allottees. Agreement to sell shall be in the same spirit or same level of an understanding between the allottees and the promoter, which is given in the model agreement to sell. by the Maha. It should specify the project specification, like a floors, number of floors to be constructed, a number of apartments to be constructed, type of apartments to be constructed, and other amenities like facilities into the project, in the layout or in the particular building per se, parking amenities, parking types, payment milestone. It should be mentioned it out clearly in the agreement to sell, and should be as actual as specified into the actual project working or the project construction per se. The very important aspect is the date of possession. So in any agreement to sell, either you mention the date of possession or not, Rera takes it out the latest date of possession which has been mentioned anywhere into the either advertisement, any allotment letter, any agreement to sell, or any sort of a date which has been mentioned it out in your while making a registration with the Rera authority. So even if you mention it out any sort of a date which is differing the date which has been communicated or provided to the allottees, in that scenario, allottees has a recourse to take it out on the earliest date possible, and he can fight with the promoter in terms of possession and everything. So the date is very critical and important while putting it out on date of possession. And even the agreement to sale need to specify the interest to be paid or to be recovered from the allottees in case of a failure on the part of allottees or failure on the part of a promoter. So this agreement to sale need to be there and need to be critically reviewed by any professional, not only from the perspective of compliances or legal aspect or the legal Rera or MOFA, the act which are prevailing, but from the Rera aspect in terms of all these specifications are what we are taking at the time of registration or we are taking at the time of project development, and from time to time, are this agreement to sale are complying with respect to the specification which is available on the Rera portal, or which is available as per our marketing brochure or the documents which is being circulated into the market or being circulated on the various portals or the various medias or various mediums of advertisement, that need to be seen by the professionals whenever they are reviewing or they are updating or they are engaging with that particular project at a given point of time. So agreement to sale is a critical aspect, because ultimately what is decided in the agreement, written in the agreement and registered, that only will prevail it out with respect to any other previous communication or anything done with the allottees. So this is a critical document which need to be reviewed by the professionals at any given point of time, at any point of time, and need to be guided to the promoter in terms of any changes need to be done from the periodical basis. So that is a responsibility we need, as a professional, we need to see, and we need to guide to the promoter. In terms of sometimes we do see the project is developing and the cancellations which are happening. So cancellations which are happening on either might be the allottee is not interested at given point of time because of his own conditions or his own suitability, or in case of because of any sort of development which is done, which is not, or the development is getting delayed. So for any sort of a reason, the project may suffer it out cancellations from the allottees, project allottees. In that scenario, as a promoter, what are his obligations, what we should guide to the promoter, and how he should make it out the particular approach to that particular cancellation, that is already provided by the Rera. So whenever we are guiding, we are looking at those aspects, because this is going to create a point of litigation and a future liability, and might need to provide for that in terms of when we are reviewing the accounts or whenever we are reviewing the books of accounts. So that need to be taken care of. So any sort of any cancellations are there. So in case of a delay in a possession by the promoter under section 18, the Rera provides some rights to the allottees to withdraw from a project. If allottees withdraw from a project, then the allottees has a right to receive the interest, because at any given point of time, no promoter is going to pay unless and until the allottee asks for it. So as a promoter, when we are involving on any balance sheet date, are we looking at those aspects, and there is a cancellation or some cancellation, there is an NOC has been taken, or any sort of when we are refunding an amount, there is no claim recourse, because as a technically or that by law, we can't force someone not to file a suit. But yes, what we can say, it is something which has been done with a consent, and there is no dues, nothing is pending from the promoter's side. So that certain document need to be created to avoid any sort of a litigation or things in case of allotee wishes to withdraw from a project because of any sort of a delay. So that need to be taken care. The important point is that because this liability which has not been accounted might get accounted once the allotee go for a complaint against a promoter. In case allotee wishes to continue with the project, then from the actual date of possession which has been promised to the allotee till the date of actual possession, promised date of possession to the actual date of possession, he is allowed to take get an interest from the promoter at the rate of MCLR, SBI MCLR plus 2%, which is there. So that provision need to be made or not, that judgment and assessment need to be taken by the professionals while assessing those cases of cancellation. There is an important thing is that in case of a defect in the title of a land, allotee can claim the compensation from promoter during the entire lifetime of the promoter. Means there is no limitation period. Under section 80, subsection 2, there is no limitation period which has been defined. So indefinitely, allotee can ask any sort of, in case of any claim works out after a project development, any third party claim works out on the title of a land. In that scenario, allotee can go and ask for a compensation with the promoter, and the promoter need to provide the compensation or oblige with the shoulder that responsibility of a defect and cure that defect. So only for this reason, even if we see under section 4, there are cases where promoters are saying we want to develop the project without affecting any sort of a sale into the project. Still, we need to require a Rera registration. Then the answer will be yes for the promoters. In case even they do not sell anything before OC, but they go post sales or sort of a sales activity. In that scenario also, the requirement is there, yes, because there are conditions like this defect in a title, the responsibility which has been cast upon the promoter need to go for a Rera registration of a project. Because in case of a future development, future litigation or future thing, this is going to be the promoter, which number which has been taken or the registration which has been taken is going to benefit the allottees, and Rera is there for allottees in terms of supporting them in case of such difficult time or the defect in the title of the land to the allottees. In case of any other default under Rera, like non-compliances and the project is getting stuck or projects is debarred from the Rera portal for non-compliances or making out of any sort of changes into the project which is not as per the consent of allottees. In that scenario, also the promoter is liable to pay the compensation to the allottees. So whenever as a professional we are engaging, we are looking at certain changes in the project on a time-to-time basis. What we look at is that the compliances are not done, or any sort of deviation which is happening from the project planning which has been done initially and the planning which is there on the ongoing basis. Then as a professional, we need to check it out. Is there any sort of a liability we are incurring, or the chances of the liabilities getting created from the allottee's perspective if allottees goes for the any sort of a demand against the promoter. So this is a very, very challenging situation for any professionals to judge it out, what sort of things can go wrong, and making it out the provision for that, or making the budget amended up to that extent in terms of going forward basis. Because suddenly certain costs works out and the budget is not sufficient enough, then the changing that budget is going to be one additional critical task on an ongoing basis, and that need to be taken care of hand in hand. Because if there is budget not going to change and you are incurring that cost, definitely that gives a wrong picture in terms of an overall project financial budgeting and everything. as I said, the non-compliances, which we can see section 14, which talks about the adherence to the sanction plan. If promoter do not adhere to the sanction plan, then what? It might be because of a certain sales requirement. It might be initially promoter has planned something in a project, but looking at a sales scenario, market and condition, he changed certain things either for betterment of a project or because of a legal requirement or because of an XYZ reason. In that scenario, it is very much required that a promoter should obtain a prior consent from a 2/3 allottees. Now, that obtaining consent and informing a RERA is a one task which need to be critically taken care of before any plan get approved. Any plan is put for the approval with an authority. This process need to be complied, and allottees or these professionals plays a critical role in terms of getting those approvals, making them aware of what are the changes and is those changes are going to affect the existing allottees or not. Because this consent need to be taken from the existing allottees, and 2/3 is almost 67% from the allottees. So that need to be taken care of. So any sort of an consent when we are looking at, so how to draft it out, that consent? What are the content of that particular consent form, consent which need to be taken from the individual allottees, that need to be provided. Because that consent is much more important how you communicate. The profession plays a critical role. Is that change leaded by the law or any sort of a marketing requirement or any sort of a project development requirement, that need to be mentioned it out. Along with that, this one more thing need to be clearly mentioned it out. Is this project, this change anyway affecting out the existing allottees, their area, their rights, their view? If this is not so, it is easier for any promoter to obtain it out and consent from the allottees. Where as a promoter, we can draft that and we can provide that. That help to the promoter in terms of any non-adherence to the sanction plan because of XYZ reason. Then in that scenario, as a professional, we can play a role and we can do that thing. Quarterly update for a RERA register project. Section 11 provides on a quarterly updates on the various aspects on the RERA portal. That need to be this project or the information which has been uploaded on the RERA portal need to be live and vibrant in terms of a project development wherever it is happening it out in whichever manner. That changes need to be done. That information should not be a sort of a constant or the stagnant information. It should be revolving along with a project development and should be make it out on at least on a quarterly basis. If it is possible at the time the event are occurring, it is well and good, but the RERA authority makes it out and compulsory that at least on a quarterly basis, this information which has been provided at the time of registration need to be updated on a quarterly basis. So RERA had make it out this by way of a circular also that changes in any building plan need to be immediately uploaded on the RERA website. Any physical progress achieved in terms of completion that need to be updated on the RERA website. Form 1, 2, 2A and 3, that means quarterly architect certificate, engineer certificate, quality assurance certificate, certificate by CA, need to be mentioning out the physical and the financial progress of the project and need to be uploaded on the quarterly basis. Form 5 need to be uploaded on the quarter 2 of any financial year for the previous financial year which has been closed on a quarterly basis. Form 4, if project has achieved a completion during the particular quarter, then in that scenario, Form 4 need to be uploaded along with an OC and the relevant document if that there is no authority, but at least by the completion certificate from the architect. Status of bookings of plots or apartments or unit. Out of the sale unit which has been registered on the portal, say in that scenario, what is the status? Are those units are still available for sale or units are already sold or booked? That status need to be provided based on actual status. Even if there is a cancellation, that need to be reported. I guess those units are still available for sale. Status of bookings of garage and covered parking. Whenever we are saying the garage and covered parking, RERA has put it out a specific guidelines for the definitions of garages and covered parking and open parking. So any sort of a garage and covered parking, when we are mentioning it, we should mention it out and mark it out. See to it that these are the, along with the status of the booking of plots and apartments, this booking of the garage and covered parking also need to be mention it out clearly on the Rera portal. Along with that, changes in the project professionals means there is a change in the either the existing CA or existing architect or existing structural engineer, existing project marketing agents. So all those professions which are listed there need to be reported and the regulated, because if you project it out like a marketing or agents, real estate agents or brokers, and you make it out, he claims it out certain things, you allow them, if you mention the name of that particular agents on the particular your website, Rera portal, and he makes it out any sort of a claim, then you are responsible. If that professional is not registered, then he can only makes it out and any sort of a claim about a project to sell it out, which has been provided, which has been there with you and him. So whenever you are dealing with that professional, mentioning the name of a professional, you should make sure that whatever that you keep a trail of the document which has been provided to them also. So based on that, at least as a professional, we can see that any sort of a communication trail can be make it out between a promoter and the marketing agents or the promoters, what material have been provided, because any exaggerated claim made by those marketing professionals which are listed on a website and identified in any sort of a communication with an allottees prior getting the allottees to the project, any exaggerated claim, promoter is responsible. So as a professional, we need to guide the promoter. Yes, any sort of a communication which has been done to the real estate broker or agents who are doing the project marketing needs to be very strict in terms of an communication either through mail or taking a confirmation. These are the things which you can talk about or which you can market or which you can promote about a particular projects, and we can avoid the promoter in falling into any sort of a litigation with an allottees or any sort of litigation at any given point of time as respect to the presentation of a project is concerned. Changes in encumbrances report. So many times we provide a form B at the time of registration that there are encumbrances on a project or there are no encumbrances on a project. So at a later point of time when the development of projects, we have taken either some sort of a borrowing or loan or funds from the any investors or institutions. In that scenario, my project has an encumbrances. So in that scenario, we need to mention it out, which need to change the declaration, and we need to provide that this much amount have been taken it out as a promoter, and we need to declare that. So this is if we are acting on behalf of any sort of an investor there, and we are mentioning that if investors, as an investor or lender's perspective, if you look at, then also as a professional, it is important for us to mention it out, that report, encumbrances report from the promoter, and do it. Otherwise, Rera will not support in case of an defect or default, and they will not treat you as a project investees or investor whenever any sort of litigation works out. So this is an important aspect in terms of an encumbrances report. Either you are acting as from the promoter's perspective or from the perspective of an investor. Status of formation of association of allottees, if applicable. There are certain situations, certain conditions are there where the association of allottees plays a critical role in terms of a project development. In case of an project which is getting stuck or which are not having the compliances in time, and where the revocation of a certification is done by the Rera authorities on a suo motu basis or on the complaint of any allottees, the association of allottees is given a preference in terms of an reviving a project, in terms of an taking over projects, so that formation of allottees need to be updated to the Rera authorities at any given point of time. Even after the project is getting complete, the association of allottees need to be informed, because the conveyance need to be done within 3 months of completion of project. That need to be given to the association of allottees or any sort of condominium which has been formed post completion of a project. So that information need to be provided, and accordingly, Rera, in case they require some sort of a communication with the association of authorities, they can do that. Status of conveyance, as I explained under section 17, there is a requirement of a conveyance need to be provided to the society or the allottees association post completion of a project within a 3 months time. In case of a layout development, after the completion of an entire layout. In case of individual building, it is not possible because the layout, after layout completion, entire conveyance cannot be segregated out. Though Rera has a provision of segregating the conveyance, but practically it is given along with an entire plotted development which has been planned initially. Entire development which has been planned initially. So the status of conveyance need to be updated. Yes, out of this layout, we have already completed so many buildings or so many apartments or so many phases, and the next phase completion, we are going to provide the conveyance and everything. So that need to be updated too, because in that scenario, the Rera can avoid the promoters any allottees claim on that part of a conveyance portion. If we are making a declaration as a promoter, we can avoid that probable litigation from the allottees and save the promoters from any sort of penalties or any sort of litigation from the Rera perspective. Changes or updates in other project details, like as provided during the time, any increase in the FSI or any sort of an approval in the FSI, additional FSI which has not been, the plans which has been initially was on tentative basis, now it is getting approved, so that can be provided. Additionally, recently they have updated out the CERSAI report. CERSAI report is ultimately the charge which has been created by the banking, which has been reported, and the repository which has been mentioned by the CERSAI by the banking channel and available on the CERSAI website. So developer need to provide on the quarterly basis, along with all updates, forms and certificates, the CERSAI report, how many charges are registered on a particular project per se. Project, how many banks or how many charges are there of a particular bank or particular unit. And as a professional, we need to see to it that this charges or CERSAI report which has been there, or the charges which are registered there, that should be only with respect to the sold unit and not with respect to the unsold unit. If it is there, it means there is some error in the report. If there is a cancellation and CERSAI report has not been amended up to that extent, then it is advisable that as a promoter, we point it out and provide to the promoter, this sir, this charge is still showing on the project or unit, and that need to be removed it out. In case there is an CERSAI report which shows that the adverse remark, yes, this project is from the unsold category, and still shows that either you are not hiding or not taking that unit into your sale calculation, and a sale unit or developer or promoter is hiding something, or there is a transaction which has missed your normal due diligence. So that you can see from the CERSAI report, and you can, so there is a timeline which has been provided. The CERSAI report, whenever you are uploading or providing, it should not be older than the 10 days from the date of uploading it. So that is a very much critical thing in terms of an as a professional, whenever issuing that and verifying that sales, sold or unsold inventory, you should look at that particular aspect from the CERSAI report. Before even we are signing the certificates, we should see to it that my sale inventory is matching with that. My CERSAI report is from the sold inventory. There should not be any unit which is falling under the category of an unsold inventory, and should look at that particular aspect per se. All these updates and everything need to be done on the Maha portal. The timeline which has been provided is in a very short timeline within the completion of 7 days of the end of a particular quarter. Okay, so timeline, we can't wait till the end of a particular quarter. We need to go on a monthly basis, do the compile our thing, do our homework, do our review our things, and for the last couple of days, because 7 days information compiling from the promoter side will not be possible, because there are other due dates, deadlines also, and this is the one more deadline need to be completed within 7 days of any particular quarter end. It is going to be really difficult task for a professional as well as the team involved, because there are tedious compliances, There are GST compliances. So making the compliances, all this is going to be on a monthly basis or the periodic basis as and when you compile the data and do that thing. So if you don't do the compliances in time, the non-compliances will be made public. Yes, Rera is lenient on this part. There are no penalties and prosecutions on the as of date, which has been levied drastically by the Rera, barring some cases. But yes, the non-compliance will be made public, and it might affect the project marketing or project standing in a public view. Because as a promoter, if you comply, you can take this Rera portal as your marketing tool. Instead of a compliance tool, you can do a marketing and do that all compliances are done. If promoter makes that approach, definitely this will serve that one sort of an boost, one sort of an confidence in the eyes of an prospective allottees or a prospective buyers, and promoters can be benefited on that part. And it will be win-win situation for a professional as well as the promoter if they do the all compliances. So if they don't do the compliances, then the non-compliances will be made public by the Rera authority. Promoter will be given a 10 days notice time to comply with. And in case if he doesn't do that within a 15 days, he will be called for a hearing with the Rera authority. And in case still he doesn't provide any satisfactory answer or satisfactory response to that, then in that scenario, promoter will be deprived of the online access, online facilities like a portal updation, extension request, or any sort of an updation on the Rera portal. And then only after the compliance of the all pending compliances, he will be provided and allowed an access to the particular Rera portal. So unless until that compliances are done, there will not be any sort of an access to the online facilities of a Maha portal. So that need to be done on the periodic. And if these compliances are not done, the penalties are attracted. There is a liabilities toward the all allottees which get triggered it out. So it is always in favor of a promoter to make it out a time-bound compliances and do the needful. In going forward, last annual thing remains, which then promoter is an annual audit of under section, which is prescribed under section 4. So every promoter need to have its accounts audited by the annual auditor in Form 5 within 6 months of the end of a financial year. So this annual auditor and a statutory auditor, this annual auditor word has been recently replaced in the month of December 2021 instead of a statutory auditor. So there was a confusion earlier. The statutory auditor means the auditor who signs the financials of a particular entity. He need to sign that particular Form 5 or any other auditor. So that is settled. And now after almost 4 to 5 years of an implementation of a law, they change it out, this particular terminology, and they termed as an annual auditor. So any CA, so it is general, any CA who signs a Form 3 other than a Form 3 can sign the Form 5. Okay, this need to be complied. That compliances need to be made either compliance need to be made within the 6 months from the end of a financial year. So any sort of any time, even though there are extensions which has been provided under income tax or the tax return filing or the some other compliances for the uploading of tax audit reports and everything, but this compliances is generally do not get extended or go hand in hand with the other compliance due dates. So it is very difficult certain time, because your financial year end compliances and everything, and the cost of projects and everything, whatever you certify, whatever have been given by Form 3 have been given by the other CA, need to be verified by this annual auditor and need to be reconciled with the books of accounts. Because when you are certifying the works of an annual auditor, Form 3 auditor or Form 3 CA, issuing CA, you need to work it out along with unless until your books of accounts are not finalized, your cost is not finalized as on 31st March of the last financial year, the chances of error and omissions in a Form 3s are higher. If that is the case, in that scenario, the comment under a Form 5 is going to be critical. Even at the time of signing a Form 5, the financial accounts are not ready. In that scenario, it is difficult. And based on the records and available, and a suitable disclaimer need to be provided, and suitable records need to be taken into custody, or the records need to be created, declaration need to be taken from the management or from the promoter, and Form 5 and Form 3 need to be signed it out. So these are the critical aspects, because that go hand in hand. Your entire project, cost of project, work in progress, whatever remains, the reconciliation with the work in progress, which has seen in the balance sheet. If there are multiple projects which are going on, and you are one of an auditor, annual auditor of a Form 5, still the reconciliation between your project cost, the project which you are certifying, and the projects which is there as per the financial, that reconciliation you should be aware of. That the reconciliation has to be, you need to demand that reconciliation of an work in progress figures or advance from customer figure, which is in the balance sheet, as an annual auditor of a Form 5, to reconcile with the books of account. Otherwise, at any given point of time, as an auditor, when you need to face the Rera authority and you need to provide the explanation, you don't have any trail to support that, and it will be a difficult situation, and a professional misconduct is going to be. Non-compliance. Promoters, many we see that out of or more than the 30,000 projects which have been registered, almost 22,000 projects are facing the non-compliances. Maha Rera is still lenient on the levying of penalties for non-compliances. They are arguing, they are making a request, they are providing the orders. Recently they have started providing orders on the provisions which are already there under the Rera Act, to make the compliances more prominent from the promoter's side, and putting it out clear cut the penalties provision. Yes, if they fails to do that, then we are forced to levy the penalties again and again by way of circulars or orders, whatever they are rolling it out from a time to time. In case there is one section which is under section 7, which says the revocation of project in case promoters fails to do any compliances in time, either on suo motu by the Rera or on initiating any complaints against promoter for the revocation of project. So any sort of a non-compliances which is done by the promoter, and the Rera finds it out, or any allottees makes a complaint against the promoter, in that scenario, if promoter doesn't provide a satisfactory answer or comply with that, cure that non-compliances, the project registration get cancelled or can be revoked. Promoter is given a 30 days time to cure that defect and make the compliance. Post that, once the Rera revoke the registration, the online project login will be blocked. Rera account will be frozen. Rera will provide instruction to the designated banker. Yes, this project frozen, debit need to be frozen. An invitation will be made. As said, then information of association of allottees need to be done. This is one of a case where the that association's intimation is critical and important. So under section, once the revocation is done, invitation will be made to the association of allottees to carrying out the remaining project work, to undertake the remaining project work under section 8. Because once the revocation is done, the section 8 triggered it out. And first invitation is given to the existing association of allottees to get the work done by way of engaging a contractor, by way of engaging a professionals. This is one of our opportunity if we are engaged from the association of allottees side. Or this is one of a critical point for as a professional CS, when we see a non-compliances, we should educate the promoter. This is going to either, if the revocation is done of a project registration, in that scenario, you will be losing the control over the project, and project will be taken over by the Rera authorities and given to some other, either association of allottees or some other developers. If the association of allottees is failing to make it out any sort of responsibilities, any sort of take an initiative for the development of a remaining project work. In case the association of allottees fails to act, then other promoters with the consent of allottees will be appointed to carry out remaining project work. So it is non-compliance is not only cost you the penalties and everything, but it may lead to an extreme situation, entirely taking over projects by the other promoter or other developer or the association of authorities, and then there will not be any sort of control on the entire projects, and promoter need to do away with whatever he has done. All his exercise will be futile exercise, and nothing will remain in his control. Looking at these aspects, now we move to the recent updates which has been there on the Maha Rera. Maha Rera issued a circular number 20 of 2021, dated 20th July 2021, on execution of registered conveyance deed. Promoter, in case of a completed projects, update on the Rera portal the steps taken to provide the conveyance in favor of association of authorities if conveyance is not provided as per section 17 of Rera. As I explained earlier, whenever we are making an online updation on the Rera portal, the promoter need to provide what are the steps, because as the project get completed, either a phase wise or the entire layout which has been registered as a project, any sort of an completion which has been achieved by the promoter need to provide the conveyance to the association for allottees. But if practically it is not possible because of a bigger layout, there is a one single conveyance or title is there. In that scenario, what is the steps, or when the promoter is planning to provide the conveyance to the association of allottees or the federation of an allottees, that need to be communicated clearly to avoid any sort of a litigation in the future. So this updates is just a clarificatory and need to be taken accordingly. There is another order 36 of 2021, dated 30th July 2027, regarding an garage, open parking area and covered parking spaces. Rera Act clearly specify what is a garage, what is a covered parking and open parking spaces. Promoter need to mention it out in an agreement to sale executed with the customer, what type of parking he is providing to the customer. There is an interesting point to note that in case of a garage and the covered parking, Rera has allowed the sale, but in case of an open parking, they said the sale is not allowed. But you need to mention it out. You need to mention it out in any agreement to be executed with an agreement executed with an allottee, that what type of parking you are providing, and you need to demarcate it out along with a plan, which was the point of litigation for many allottees and the promoter. So this is just a best practice which can be developed by the promoter or whenever they are executing any document with the customer or the allottees. And the promoter need to say as a professional, we need to guide and we need to see that these are all implemented as in sort of an best practices into an industry to avoid any sort of litigation or future litigation. Even it is by way of an ignorance or sort of an error that need to be avoided, because they are now making it out. All parking spaces need to identify and mark it out, demark it out. And along with whenever the floor plan, which is to be attached to the particular agreement to sale, even the parking space need to be attached to the particular agreement and need to be identified with a colored mark or something. Order number 39 of 2021, dated 28/10/2021. Submission of Form 1, 2, and 3 to the bank and Maha. With effect from this order came effect from the 20th December 2021. Recently, law also provides, section 4 also provides that for any withdrawal from Rera bank account, Form 1, 2, and 3 need to be submitted to the bank. But it was relaxed in some time, and they said it need not be provided at every withdrawal or anything. That was relaxed by way of a circular. But recently, from the December onwards, 28th December onwards, the Rera has made it again compulsory for any withdrawal of an amount from the designated Rera bank account. This Form 1, 2, and 3 need to be submitted. And a scan copy of same forms need to be submitted to the Maha also on the given email address. Order number 40 of 2022, dated 14/1/2022, disclosure of information in public domain. To reduce the fraud between the promoters and allottees, following documents uploaded by promoter will be disclosed in the public document with effect from 22nd December 2021. Its Form 1 is an architect certificate, Form 2 engineer certificate, Form 2A quality assurance certificate, Form 4 Form 4 by the architect for completion of a project, and Form 5 for the annual audit. Form 3 have been excluded over here. That Form 1, 2, 2A, 4, and 5 will be made publicly available for the review of the general public or any stakeholder, whoever may be involved with the project. So now all professionals, whenever they are issuing the forms, either as a CA or as an architect or as an engineer, need to be very extra cautious in terms of an issuing a form, because this will be made now publicly available, and the publicly in a public domain it is available. Any sort of a discrepancies there, it will be definitely going to be noticed immediately and pinpointed. So the chances of the professional liability might get arises, and the chances are more that the any sort of an deviation or any sort of an misinformation reporting will be pointed out immediately to the respective professionals. And a disclosure of sold and unsold inventories. So now it is not possible. Some promoter says that this inventory mein project mein maal hi nahi hai. And even sometimes that the promoter sold it out of one particular unit which has been given to the investor, to the ultimate customer. So that sort of a practices is going to be fully stopped, because whenever any allottees is going or the customer is going with the promoter, they can look at the inventory which is available on the particular date and go for a booking of that. So inventory is going to be fully made public, and you can go for a particular flat per se. Even the CERSI report is going to be there, which is fully made available. So whenever someone is approaching for any project, even as a professional, we have a good opportunity to support the services which have been earlier provided by the lawyer, the search report. We, by way of certain practices, adopting certain practices, we can review, is there any sort of an dual transaction happen on the particular unit which the allottee is looking at. We can give that sort of an assurance or certifications to the allottee, and we can have that one avenue open for us, which was earlier only available to the lawyers. Okay. So after CERSI report, which is also available, anyone can access that CERSI report and look at any sort of an charge which has been there on the project, and work it out and do the needful. Declaration about the commencement certificate. At the time of registration of a project, promoter need to provide a declaration on the commencement CC. When is going to have that CC and in what manner? Okay, the CC will be received in so and so or part so and so. In that scenario, that declaration is also. So it means that if you say that all projects has received an approval, so practically this declaration will be an irrelevant, because right now the Rera is not providing any sort of an registration till the project is receiving at least the basic plain CC. So that declaration, you can see that, and before that declaration is there, I think so that this declaration is irrelevant in terms of the existing practice of an Rera authority, where they are only providing the registration on the commencement, receiving a commencement certificate. Yes, in the past, they have made it clear that sometimes they have issued the Rera registration on the IOD basis, and still the project has not received a CC. In that scenario, they have asked for the promoter to have that CC in declaration about the CC in place, at what stage it is stuck and for what reason it is stuck, so that the buyers can take an informed decision whenever they are approaching for the project investment of something. In case promoter's name is not on the any sort of an approval or NOC which has been there for the project, like in case of redevelopment projects, the entire approvals and everything will be on the society's name, and the developer or the promoter is only holding the development agreement. In that scenario, that nexus between the name of the NOC holder or the approval holder and the promoter need to be clearly mentioned it out, and the document need to be uploaded there. So this is an additional document which need to be make it out. Along with that, now the major recently Maha regulation, which is a modification or amendment to the regulation 2017 of the Maha which has been gazetted by the gazetted notification of an amendment to the regulation of 2017 by a Maha regulation 2021, whereby the Maha has amended Form 1, 2, 2A, 3, 4, and 5 with effect from the 22nd December 2021. Though for the financial year 2021, Maha has extended the annual audit date till the 31st December 2021. But just before 8 days, they have changed the entire form. And the Form 5 has a much more information than the earlier Form 5, and reconciliation which need to be done. And it was with an immediate effect of 22nd December 2021. So that we need to see in terms of, we will see in detail what are the changes which has been done by the Rera authorities. So I'm just sharing the form and we can discuss it. Is the screen visible?
Yes, sir, visible.
Yes, visible.
So Maha on the 22nd December 2021 gazetted the changes into the Maha Real Estate Regulation Authority General Amendment Regulation 2021, amending the regulation of 2017, whereby they have, as I explained earlier, they have changed in regulation 4 the words statutory auditor for the Form 5 to the annual auditor. And they have replaced the Form 1, 2, 3, 4, and 5, which we can see on the actual form, and we can correlate. I'm just running through you the Form 1, 2, and 2A, It is because we are dependent on many of the things and the figures which are there coming from these forms and reporting on the form 5 or form 3 per se. Specifically from 3, where we need to report it out of figures from the form 2. Architect certificate, when we look at an architect certificate, there are no much changes except the changes which has been done by way of removing in the subject line the longitude and latitude details, which is generally now made available on the Rera portal by way of identifying a Google location. So when we are doing a registration, we need to identify a location of a particular project in which region or which area it is situated. So it automatically captures it out there, and that region and requirement, they need not mention it out. As compared to the earlier form 1, they have removed the architect need to provide the names of the other professional as well, like a licensed architect, structural consultant, MEP consultant, site supervisor. That need not be mentioned in this new form. And the only change which has been done in this table A, this point 2 and 3, which was an earlier, the same point which has been just repeated, the basement and the number of plinths, point 2 and 4, which has been earlier the one single entry, which has been basement and the plinth have been now split it out, and it has been made it just clear cut and a separate entry. So here the architect is going to identify the percentage of actual work done, which was also the same case in the earlier form also. In case of a table B, there is no change per se. And the entire form 1 remain it out as it is. So only one thing is what we can do. We use this form, update it out for progress of a physical progress. This form might be this need to be issued on the layout basis, entire layout, because internal roads and footpaths, either it might be a single standalone building, then it will be applicable or not applicable. But in case there is more than one building or more than one structure is available on the entire project or the layout, and in that scenario, percentage of actual work or has to be done on that layout basis, and we need to update accordingly on the Rera portal from this certificate the percentage of work done. Now this certificate is also available, and your updates on the project is also available. So if any deviation is there, as a professional, we need to update it out on a quarterly basis and we need to comply with that. And there is a form 2, engineer certificate. This is the form which is dealing with a figure work, what we are certifying in form 3. Form 2, as like a form 1, they have removed that longitude and latitude information from the subject line and the professional details from the para 1, which are the professionals involved in the particular project. In terms of rest, they have only done one thing in a page, this point 2. We have estimated the cost of civil. Before that, it was a cost of obtaining the occupation certificate, OC, which has been removed it out. So here, engineer need not certify the cost of obtaining an OC, because OC requirement is something different, which is beyond the scope of an engineer, and he is now only restricted his scope of the costing in terms of only civil, MEP, and allied works. Means pure construction works on the site. Apart from that, there is no other change in the form per se. Form 2 figures are important because that we need to refer it out. So every table A and B, table A is about the ultimate cost and table B about the internal and external development works. Okay, that we need to mention it out. This both costs we need to refer it out in a table form 3 and need to work it out on a regular basis. Unless and until form 2 figures are available, we can't complete it out of form 3. But in a practical situation, we generally take a versa versa. First, we paper it out of form 3, and then we identify a figure for a form 2. So that should not be a case. participants, we will take your questions later on. Once this presentation is over, you keep your questions ready. You can take a one by one. That's for the time available. Form 2A. Form 2A is engineering certificate for quality assurance. In the same form, under the subject line, the longitude and latitude details are removed it out. And other material, other aspects, other matter remains the same. There is no change in the entire form per se. Only thing which has been done is this form need to be submitted on the yearly basis. Earlier it was on the quarterly, which was not done. So this is the only change which has been done. Form 3, the CA certificate. On the CA certificate, earlier there was no subject, which has now been added. And it is a subject, entire subject, the compliance of Rera for the registration number so-and-so being developed by so-and-so is based on records and produced. The entire subject line and the next para have been added recently. In terms of table A and table B is nothing but an earlier, the cost of real estate project which has been given, that there were two tables, simultaneous tables were there. So this has been now only split it out in terms of an table 1 and table 2 in the CA certificate. So once we look at that land cost, value of land cost as ascertained from the annual statement of rates. So this is a typical estimation, means the budget. And this budget, when we are looking at a CA certificate, this is the first table is on the estimation cost of a budget, the time of registration of a project. Means it gets amended. If it gets amended, then it is an amended registration budget of a project need to be mentioned it out over here. Now, critical aspect which need to be seen, this budget, your budget for income tax need to be go hand in hand. If budget for the income tax is something saying some different figures, and a budget for the Rera is saying some different figures, barring certain items like in marketing, which is not allowed under the Rera, you have an additional line item or heads under the income tax. So keeping those one or two items specifically, there should not be any sort of an deviation in the cost. If the deviation is there, you are inviting trouble for yourself. You need to provide the basis and you need to provide a justification, either as an Rera auditor or as a Form 3 certification or as an annual account certification, like a statutory auditor or someone, or a tax auditor. So wherever you are involved as a professional, you need to see that these board's budgets are matching. If these board's budgets are not matching, in that scenario, you should be prepared for the backup working and everything, and justify the authorities whenever they ask for. And promoter have a difficulty in explaining a 2 to 3 budgets for them. Even now, bankers are looking at these budgets and assessing the entire project appraisal or credits on the basis of these budgets. So earlier, this statutory budget or the budgets which has been followed for income tax purpose were not available or not readily available on the website. But now this information can be accepted by way of a logging of promoters login, and the bankers are asking for that certificate. So as an professional, you should look at that. This all budgets, whenever you are preparing these budgets, you should have all critical backup and workings, and should be synchronized with the books of accounts and the planning which has been there. So in terms of a year, more critical aspect is the value of land as ascertained from the annual statement of rates. Sometimes what happening out, you have acquired a land at a very earlier stage, but the only avenue which is available as a promoter to withdraw a fund is you can replace that historical cost or historical value by way of an ready reckoner value of the particular year in which you are registering the project. So that avenue is available, and you can have that cost budgeted to match the land cost at par with an existing rate. Like you are in 2010, you acquired a land, particular land for particular 1 crore rupees. And today that at that time the cost index or ready reckoner value of that particular is on a XYZ per square feet or per square meter. And that rate has increased. Now in 2021, in that or 22, in that scenario, you can take the ready reckoner rate with respect to that particular area of today's rate when you are making a Rera registration. So that avenue is available to the land cost whenever you are making any sort of budgeting. But that budgeting will not affect the income tax budget per se. So that we need to take it out. This is a critical point in terms of whenever we are planning for a promoter per se. So that's all aspects are available. In terms of an estimated amount of premiums payable to the obtain the development rights, FSI, fungible FSI. So this will fall under this category of land cost. Estimated acquisition cost of TDR, if any. If you are obtaining any sort of a TDR, then it will be forming a part of this land cost. Estimated amount payable to the state government, union territory, administration, or competent authority, or any statutory authority, then it will like a premium paid to the Maha will fall under this category, or SRA. Any premium paid to this fall under this category. Estimated land premium payable as per annual statement of rates for development of land owned by public authorities. It will fall into this category. Under rehab scheme, estimated construction cost of rehab building, including site development and infrastructure for the same as certified by engineer. Estimated cost towards clearance of a land or any incumbents, including cost of removal of illegal occupant. It will fall into this category. Estimated cost of ASR link premium, fees, charges, and security deposits and maintenance deposits, means the amount maintenance deposits payable to any authority towards or in the project of rehabilitation will be categorized as a land cost under this category. Any other cost, including interest estimated on the borrowing done specifically for construction of rehab component. It will not go as a finance cost, but it will go for a land cost, because rehab is not a sellable portion. So anything done to specifically done for the construction, even if you have a borrowing which is used for a particularly rehab portion, will be categorized as a land cost and not as a finance cost. Finance cost only will have the budgeting or the budgeting for the sale component. So that need to be taken care of. Development cost of construction of building. Estimated cost of construction as certified by engineer. Cost incurred on additional items on included in estimated total cost. Both these things are coming from table B and C of an form 2. So that need to be taken from the engineer certificate. Estimated expenditure from the development of an entire project, excluding cost of construction, like salaries, consultant, site overheads. So certain things, if we see that salaries means what? Anything related to the site, we can conclude it out over here, which is an admin related things, which is a basic nature of admin or marketing. This need to be avoided over here. Estimated taxes, sales, fees, charges, premium, interest, etc. payable to any statutory authority. Does this qualify for income tax? No. Does this qualify for GST? No. This is only taxes and cesses like payable to the BMC or something which relates to the project development per se. Only those charges are there. Interest payable to financial institutions, schedules, banks, NBFCs or money lenders on construction funding or monetary money borrowed for construction. So this segregates it out. Any borrowing done either on a consolidated basis for the entire project, promoter need to identify, or as a professional, we need to segregate it out, that borrowing, how much fund have been used into the rehab component and how much has been used into the construction of a sale component. And accordingly, we need to identify the borrowing cost. Here now, here it was a part of an explanation on the circular to the CA on the CA certificate, which has been given earlier. But now it is to make it out by way of a note that pass-through charges or indirect taxes are not to be included in estimated cost of a project. But That is pass-through charges. Pass-through charges means apart from the our indirect taxes not included in estimated cost of a project. When we say means what? GST which is available, because for this note we need to understand why this note has been put it out. We need to go back to the history of an GST, where the project have been categorized as an ongoing project or a new project as on 1st April 2019. On this 1st April 2019, by way of a notification number 3 of 2019, GST authorities has segregated or provided a definition of an ongoing projects. Ongoing projects which can take the benefit of GST, and new projects which can only levy the 5% of the GST on the output services or the need to be sold without a benefit of a GST. If this project is an ongoing project, the which certification which you are doing for, then this indirect taxes need not be included in estimated cost of project. This is the meaning of this note. If this note is there, it means it is only applicable for the ongoing projects on the 1st April 2020 and getting the benefit of GST as an input credit. Otherwise, this note is an irrelevant, because your cost is ultimately including entire thing. You do not have, as of from the 1st April 2019 onwards, any project which is a new project do not have that benefit of claiming that input credit on the GST. So this note is going to be irrelevant in my opinion. Estimated cost shall be revised through correction application. Yes, and at any given point of time, as we see under section 14, if there is a change in the plan, then my construction scope will get increased. If I'm additionally getting an approval to build an additional floors, definitely in that scenario, my construction cost is getting increased up to the extent of that additional floors. So in that scenario, we need to work it out and correction into the budget or estimated cost by way of correction application within fees of 1,500 plus GST. So that point is available now. Earlier it was unavailable, but there was no clear-cut note or guidance available. But now it is made it out in a form itself. Table B is nothing but whatever the cost we have discussed it out on table A, it is table except one thing, where if you see in a land cost under rehab scheme, point F1A and B, incurred expenditure for construction of rehab building, minimum of A or B to be considered. Minimum of A or B to be considered means construction cost for construction of rehab building, including site development infrastructure for the same as certified by engineer, or incurred expenditure for construction of rehab building as per the books of accounts as verified by CA. It is a minimum of 2. So at any given point of time, first an information is always coming from an engineer. Engineer will give a certification that this much work has already been done, and the value of that work certified is X amount. As per books, even if we have a higher amount, we can't claim it. It is just to avoid a cross verification of cross checking of that up to the extent of the project is receiving of completion. Only promoter can withdraw up to that level. So whichever is lower, the condition have we put it out, either engineer as per engineer certificate or as per books of accounts verified by the CA. Whichever amount is lower need to be taken as a cost for the construction of rehab building. That difference might be arising because only what we can see is a cost as per the CA certificate being always adopted as a normal practice. Reason being, on the site, development is taking fast and the bill submission is generally taking a 15-20 days time. And in between that, the cost incurred as per books is going to be lower. But in the reverse scenario, when cost as per books is higher and the progress on the site is lower, that to avoid that situation or to curb that situation, this condition has been put it out, where it is happening by way of taking an additional invoices, additional bills, or inflating a cost. To avoid that practice, this condition have been put it out over here. Same is the case on the in the this point 1A and B, the construction cost of a sale building or the sale component. The construction cost incurred including site development infrastructure for the same as certified by engineer, or actual cost of construction as for the books of accounts as verified by the CA. So here also the same situation, same scenario, and same practice need to be followed it out. Total cost of a project actually incurred as on the date of certificate, considering the above criteria which has been provided. Proportion of the cost incurred on the land cost and the construction cost to the total estimated cost need to be worked it out. And from that working, withdrawal from the designated account need to be how much amount which can be withdrawn. That can be ascertained, identified, and less amount which is withdrawn. Actual withdrawal which has been done from the bank account need to be mentioned at a 0.6. And this 0.7 works out the net balance available limit. Is there a promoter is eligible for any other limit at the additional amount as a withdrawal from the project or not? That need to be mentioned it out. Here again need to be mentioned it out that pass-through charges need not be deposited also. See, it is only they are mentioning pass-through charges or indirect ratios not included in the incurred cost of a project. But on the reverse side, it also need to be mentioned it out. Whenever you are collecting an amount from a customer, that customer which 70% need to be deposited or 100% need to be deposited as per the cost incurred is only excluding the indirect taxes and the pass-through charges. Pass-through charges, which is a pure reimbursement sort of thing. If it is not a reimbursement, it will form a part of your Rera account. Now we see Table C, the statement for calculation of receivable from the sales of real estate projects, sold and unsold inventory. This was earlier also part of a certificate. So there is no new things which is available. Only thing which need to be considered or keep on track by the professionals, that under unsold inventory, every year, the unit consideration as per ready reckoner rate need to be updated. Because I have seen the certificates issued by the professional for the 4 to 5 years, that ready reckoner rate is not changing at all. Promoter is providing you ready reckoner rate with the same thing, and they are not changing even. No one is bothered about that. So this is the point which need to be keep in check. At every moment given point of time, ready reckoner need to be, because ready reckoner increase the ready reckoner is always in the favor of a promoter, and that can reduce the gap between the estimated cost, the balance estimated cost to complete, and balance receivable of a project. So now which is a table D, which was earlier a part of a table D, is now termed as a comparison between balance cost and receivable. It was an earlier form of part of an additional information from project. Okay, the criteria and everything remain the same. Balance estimated cost of a project to complete the real estate project. Difference between the estimated cost of project cost less cost incurred. Balance cost of receivable from sold apartment as per table C of this certificate. So now when you are certifying balance amount of receivable from sold apartment as per table C of this certificate as certified by chartered accountant as verified from the books of accounts and records. Now means CA need to verify not only from the books of accounts, but actual document or the allotment letter or the agreement to sale which has been executed with the ultimate allottees or the customers. If you fail to do so and there is any sort of a discrepancies into that, as a professional, when we are issuing a Form 3, we are responsible for that. Balance unsold area to be certified by management or to be verified by CA from the records and books of account. When the SERSA report is available, management is providing a declaration, SERSA report is available, there are a mismatch to that. Either you identify or you rely. Ultimately, as a professional, you are responsible. Either you have not seen the records, you have not identified a mistake. So it is very critical now. As a professional, the responsibility was there. SERSA report, you need to read it, you need to understand it, and you need to report it accordingly. Even the certification given by the management but that need to be cross-verified with the CERSI report. Estimated amount of sales proceed in respect of unsold apartment, which we've already discussed as per table C. Estimated amount of total receivable of an ongoing projects, what you have seen, sold and unsold inventory. If it falls below my estimated balance cost, then 100% amount need to be deposited into the Rera account. Else, only 70% obligation, deposit obligation is there on the promoter. So this needs to be checked on a quarterly basis or even on the monthly or monthly basis or periodical basis. Whenever we feel certain things that cost is overshooting the balance receivable as per the ready reckoner rate, these conditions of 70 or 100 need to be changed it out. Now there is a table E. Table E is purely summary of a bank summary of an Rera account which is available. So whenever as a professional, because this was not an earlier forms requirement and we have never looked upon, we have only seen that how much 70% obligation was there. We work it out back end working and we were not to report it out specifically on this aspect, but yet now they make it out a very clear cut. What is the designated account opening balances? What are the deposits into it? What are the withdrawals from it? It is just a summary of a bank statement which is made. Even the closing balance which is there need to match with at any given point of time. Say you are certifying for 31st December 2021. This closing balance of bank account as on 31st December 2021 need to match with your certificate figure. If it is not matching, you need to provide comment or observation into table G. Why it is not matching? Ready with a reconciliation. Any deposit or withdrawals, any deposit, if it is falling below 70% of your sold inventory, you need to report it out because deposit need to match with your 70% or 100% based on the criteria where you are falling or the situation of an cost escalating or cost do not escalating the balance receivable. So deposit need to be arrived at accordingly. Withdrawal from the project account, eligible cost, because there is a cost as we explained, there are budget, the Rera budget, as per the Rera budget, which are eligible costs, only withdrawal can be done for that particular cost. If that cost is done, withdrawal is done as per the particular eligible cost, that and if or it is exceeding or it is going for any other purposes than the eligible cost, then the withdrawal, any deviation in the withdrawal need to be mentioned it out into the comment or observations of a CA. And this table need to be reported accordingly. Because if you see the wording below the table, I hereby certify the required proportion of money as specified in the Act collected from the allottees of the project unit as indicated in table C has been deposited in Rera bank account. If it is not deposited, need to report it. I hereby certify that the promoter has utilized the required proportion of money as is specified in the Act collected from allottees for this project only for the land and construction of this project. Land and construction, this is the land and construction. Okay. So land and construction cost of. So what is the construction cost which we have seen that? Means of finance, table F. Now this is a critical aspect. Every lender will look at, every stakeholder will look at who is financially involved with the viability of a project, who is financially involved with, even the tax authorities will be more interested. Income tax authorities will be more interested how you are financing and what is your budget for Rera. And what is the deviation item from the Rera budget and the tax budget or the books of account budget for the overall budget. Own fund, from where you are making it out of fund. At the time of registration, how much was your cost? The first column is only at the time of registration. What was your sources of fund you have planned for? And what is the source table? Second table is proposed estimated budget. What is your budget as on date when you are signing the certificate? Is there any change in deviation? Earlier you were not planned for the borrowing, but now we are planning for borrowing. So what is the second effect is coming out either in the own fund, own contribution or customer receipts. What you are planning? Unsecured borrowing, what you have done it. Earlier you are taking, you are not taking. So that estimation need to be provided. How you are going to meet the balance cost or existing cost of a project. Total estimated cost. Then the actual. As per the books of accounts, how much is an own fund used for this project. Books of accounts may be showing that 50 crore, but 50 crore may not be the own fund which has been used for this project. This project is only involved the 5 crore. This project has an additional borrowing from the institution or the NBFCs or the banks, which need to be mentioned it out over here. And the customer receipt used for the project. If you are showing that reconciliation or that tuning need to be or synchronization need to be done, how much you are showing, because the customer receipt used for the project need not fall below any withdrawal which you have done from the Rera account or the E 0.3 withdrawal which is there. Customer receipt used for the project should not fall below this. Actual amount should not fall below this. If it is falling, means there is an error in the either your certification, your reconciliation, or some sort of a thing that will be pointed out by any authority or any stakeholder on ongoing basis. Any sort of comments, observations, deviations, reconciliation of figures need to be reported in the table G. So this is a nutshell. It's a comprehensive certificate which has been drafted earlier. It was the professional need to do all this backward working and keeping their working files. Now this is made on the face of a certificate. So any change or any sort of an deviation will not be accepted by any authority or any stakeholder whenever they look at the particular form per se. Then there is a form 4. In a form 4, it should be used by the architect at the time of completion of a certificate and to be uploaded on the Rera website. So for once the form 4 is uploaded along with an OC, then there is no requirement to make the further compliances. But till the issuance of the date of issuance of a form 4 along with an OC, all compliances need to be done. Either it might be updation of a project, it might be sales status, it might be any other sort of a thing, or like a conveyance. Even after a form 4, the conveyance, the other obligations like a conveyance to the association of allottees and providing documents and everything, that compliances need to be done. But other compliances on ongoing projects need not be, it will stop from here. So form 3, form 1, form 2, 2A will be stopping from this point forward. So this is the form 4. Only change they like what we have looked from the earlier form is the longitude and latitude details, and the professional details have been changed it out. Along with that, the table which you see over here, the occupancy certificate, because now the trend is of a part OC, which you have seen that part OC which is we received on a particular project in a phase manner. So phase has not been defined anywhere by the Rera authority. But phase can be in a layout, bigger layout, where have the multiple buildings, it might be a single building. In a single standalone building, it might be a particular floor, or it might be a particular side of an units on a particular entire building. So phase can be anything as the promoter determines. So based on that phase, the occupation certificate need to be mentioned it out. For whom we have received in this form 4 or occupation certificate, completion certificate, layout, building number, wing, anything need to be mentioned it out. Date of obtaining that, a local planning authority who has provided that completion certificate, that need to be mentioned it out. One more change which has been prominent change which has been done. The wording of this certificate, it is the basis of the my inspection and certification received from structural engineer. Earlier it was only on the certification received from the structural engineer. So the cases which has came across with the Rera authorities, where the architect has issued a form 4 based on the structural engineer's completion certificate, but on an actual verification, there are still many things need to be completed. The amenities or internal works need to be completed on the project, which do not qualify in a general parlance as a completion. And architects were professionally held responsible for the issuing of form 4. So looking at that scenario, the changes in this form's wording has been done. So I hereby certify the basis of my inspection and certificate, instead of earlier was the wording is I certify that certificate received from based on the certificate received from structural engineer. This is the change which has been done in form 4. And next form is a form 5, which is there of an interest again to the CA professionals. there is no much change per se in terms of an subject and wording. Yes, in terms of an deposits, now the table which has been added. Earlier this were into the word format or the elaborated paragraph format. Now it has been made it very clear in line with an form 3. Total amount collected from the allottees from this financial year, particular specific financial year for which we are certifying this form 5, and till date, from the starting of a project to till date. Even if it is a project was earlier registered, not registered, it was starting from the earlier period of an Rera implementation, it doesn't matter. Total for the project till date means total for the till period. As per books, so percentage of amount to be deposited as per Act, 70% need to be deposited. Have we deposited that or not? That need to be checked into. Amount to be deposited as per 1 into 2, that is a percentage 70% or 100% based on a period to period. So there might be not a single situation scenario. If a project do not have the ready reckoner rate in line with an market value, then there might be a situation at a given point of time 70% need to be deposited and sometimes 100% need to be deposited. So that reconciliation, that working on the period to period basis need to be back to the back end working, and that this column need to be further bifurcated into 70% and 100% column, and this amount to be deposited need to be worked out at a point 3. Total amount to be deposited in their designated bank account need to be seen for the financial year and for the project as a whole. And if there is a shortfall in any deviation, okay, that need to be reported in the point 6. Yes, this amount need to be deposited at this particular level, and it has not been deposited. So not only this reporting, but now additional requirement of when this default has happened, that need to be mentioned out. So if you see the wording, amount collected, deposit shall not include a pass-through charges and indirect taxes. Okay. So that is applicable in the form 3 as well. Is the required proportion of money collected from allottees for the project unit specified in the Act designated? Yes or no? If no, please mention the amount of not deposited. Okay. Only amount mentioning withdrawal, opening balance of designated bank account, total deposit, total amount withdrawal, closing balance. There was one particular from year to till date. Here they are asking not only for the entire project, but for this fiscal financial year, as well as the separate figures. If you have made good any sort of a shortfall in this financial year, then also this will qualify somewhere, because they are answering, they are asking the compliance on the yearly as well as on the overall basis. As specified in the Act, all the amounts withdrawn during the year from the Rera account were within the withdrawal limit as certified under relevant form 1, 2, and 3 issued during the reporting period. Yes or no? If no, please provide the details below. Date of withdrawal and amount of excess withdrawal. So not even they are asking the default, but they are asking a date of default, when the default was done. So whenever we are asking a working, or whenever we are issuing a form 3 or any sort of a withdrawal mismatch is there, if identified in a form 3, the best practice is to change it out or cure it out in a later period of time before issuance of before completion of a financial year, so that only note will be forming part. Yes, in this particular, but that has been cured. But if that continues on that, then this will get reported over here. And if form 3 do not have any comment on that part, and then the professional involved in a form 3 will also be held responsible professionally on the issuance of such forms. Utilization. We certified that the promoter has utilized the point C, utilize the amount returned from designated bank account towards project cost only, as specified in the Act. If no, please provide the detail below. This means that when we are doing a reconciliation, that WIP figure is almost important in any sort of, unless a WIP figure is frozen, and it is not frozen as a figure frozen on the particular 31st March. This figure, this utilization, tracking this utilization, certifying this utilization, will be putting it out everything in the dark. Okay, so it will not match with the books of account. There will be a questions. So whenever we are certifying, we should have a proper backup working and everything on which figures we have relied upon. If any allocation from this particular financial year happens on the which is called the common cost, which has been allocated on the some proportion basis, which has been changed drastically, then in that scenario, the chances are there that the certification what we are providing might go wrong. And any qualification observations of a CA, which we have seen in terms of a compliance of Form 3 and the Form 5, any deviation, any sort of a reconciliation, that need to be mentioned it up, any sort of an observation or qualification. So this is the place available. Here it was a best practice to have that by way of a notes or explanatory notes. So they have made it now compulsory part of a qualification or observation for CA to work it out and provide that. So this completes the recent amendment in terms of an Rera. So I conclude my presentation over here.
Yeah, thank you, sir, for such a wonderful presentation. Now we have some questions. I would request Pratik Maru to take up the questions one by one.
Yeah, sure, sir. Okay, sir. So first question is SRA and Maha development. So SRA and Maha will be the co-promoter in means is there any circular for this available readily? Sir?
Yes, circular is available. I do not recognize the number, but I can provide to you.
Okay. Sure. Thank you.
Ask them to send me a query on my email.
Okay. Okay, we'll accordingly inform the member. Then second question is in case of a pre-Rera era project, are the developers automatically getting transferred to Rera? Is there any fresh agreement required or the old agreement would continue under Rera?
No, agreement execution is not going to challenge it out. Only the obligation between whatever the agreement you have entered it out, that will remain valid. But the terms, if there is any terms which are non in synchronization with an model agreement to sell, which has been prescribed by the Rera, then in that scenario, developer need to make changes accordingly. That provision need to be, or understanding need to be incorporated between the allottees and the developer.
Okay. Can we approach Rera for delay if there is an extension granted by the developer to the developer by Rera? However, he has already exceeded the agreed date of handover.
Sure. Even if extension has been granted, Section 18 says for any reason, original date is your cutoff date, and beyond anything is going to be remedy can be available against that particular delay, which is for the project.
Whether when developer is selling the units after getting OC, he still needs to register with Maha. So he's registered front only, right? He has to register before only.
No. Come again on the query.
The query says developer is selling the units after getting OC. He still needs to register with Maha.
Yes. Because there are certain compliances, certain conditions are there to identify that even to market, even he is not selling, he is doing a market or advertising sort of a thing or putting a board, hoarding. He need not execute it any sort of an agreement or sale. But even if he do the marketing, he need to have the data registration in place. And there are certain compliances, as I said now, defect in a title, which is a post 5 years of an completion of a project. So that right you can't take from allottee. To identify that particular right, there has to be, to file a complaint, there has to be Rera registration number has to be there. So at any given point of time, Rera authority may ask you to register it, or you go for a suo motu.
Then next query is percentage of completion of project to be applied on amount received from allottee in separate accounts or estimated cost of project for withdrawal from Rera account.
I didn't get a query. If you can repeat it again.
Wait, I'll just try to repeat it again. Percentage of completion of project to be applied on the amount received from allottees in separate account or estimated cost of project for withdrawal from Rera account.
Estimated cost of project.
In case of delay and we wish to withdraw, from which date interest is calculated?
From the original date. If your withdrawal is there from the day you have invested till the date of your withdrawal, your promise date. Generally, it is the promise date, because why you are withdrawing, it is only one reason, there is a delay. If there is a delay, you are withdrawing, means from the date of your delay date, the original promise date, till the date you are withdrawing, you can claim that interest.
Okay. Next query is, if the amount has been invested through borrowed funds, not by hypothecating this project, whether it will be treated as incumbency?
No, because encumbrance is for the whom? Encumbrance is for the project. If you have encumbrances, this query will be from a promoter's side. Encumbrance is from a promoter's side. If you have taken a housing loan, it will be again encumbrance from a promoter. But for a promoter per se, he has taken from some lab or something, or some sort of a product, or some mortgaging some other project and used money for this project. That will not be an encumbrance for this project, unless and until you identify and you declare yourself. Yes, I have used money for this project. On a say corporate lending is there, when the corporate or the balance sheet lending is there, and there's a common fund which is available. 100 crore fund is available to be utilized on the 5 projects. Developer user 20 crore over here without any specific borrowing of mortgage of this particular project. In that scenario, if he declares himself, yes, I have used a 20 crore from this fund, in that scenario, it is available. Otherwise, it is not.
Then if professionals like architects or engineers are changed by the promoters by any reason, then is there any requirements to give reason for such change?
No requirement to give any reason. It is only information need to be mentioned. Who is going to certify whom we are relying? When you are mentioning on your portal, you are certifying this is my authority, these are the professionals involved with the project. In that scenario, and that certificate when you see on the portal, because now it is in the public domain, which is available, all forms, form 1, 2, 2A. So any end user can easily identify who are the professionals involved with the project, and we can rely on those projects who are certified.
If occupation certificate is received prior to 1st May 2017 and subsequently builder puts the plan for amendments with BMC, when he gets additional FSI, whether Rera will be applicable?
Sure.
What is the responsibility of the certificate issuer if details does not match with the certificate issued are not uploaded by the promoter?
Come again?
Get it. What is the responsibility of the certificate issuer
Mm-hmm.
if the details doesn't match with the certificate issued are not uploaded by the promoter? I think so.
Uploading is not the responsibility of an professional. Uploading is a responsibility of a promoter. You have issued a certificate on time. So ultimately, if you have issued a wrong details, see, professional liability only works out when you have the wrong details, or there is a gross negligence on your part. In that, the responsibility is there from your respective bodies, governing bodies. They might file a complaint with the respective governing bodies, like for the CAs. ICI will be filed with a complaint against the particular member, and the member will be held responsible for that proceedings. Member have issued a certificate, promoter have not uploaded it. It is not the fault of a professional. In that scenario, it is the fault of only promoter.
I think member is trying to convey that details doesn't match with the certificate issued are not uploaded.
Might be uploaded. Details uploaded might not match with the certificate. This might be a query.
Might be the
So,
query.
So in that scenario, either the details which you have the proper backup, there will not be any sort of an because if you have issued on the relying on the proper information and everything, in that scenario there will not be any sort of an
Then Form 3 can be issued by final auditor or statutory auditor, Form 3 other than issuing Form 3 just to confirm. So yeah, you have mentioned this in the presentation also. The both
Yes,
cannot
yes.
be same, right? Is ICI UDIN required for certifying Form 5 of Rera?
ICI?
ICAI UDIN required for
Yes,
generating.
yes. Any certification it is required.
Is any separate CA registration required under Rera as Rera auditor?
No, as of date not. They are making a panel for the account audits and everything, like a bank panel and everything, but it is still not implemented.
Any default on loan taken by promoter need to be informed to Rera?
That is the encumbrances. When we say the encumbrances, what are the so that declaration need to be there. And when we are making a sell-side charge and everything, that declaration is already there. The default, when we say the default which has been occurred, there is no provision in the Form 3 to specifically mention it out that the default has been done. But as a precautionary measure, when with the means of finance which is there, means of finance is in spite of a non-utilization of amount, that liability will be worked out. That liability will be going to increase on the month-to-month or year-to-year basis. Okay. In that scenario, we need to mention out that in the comment or the report, there is a non-compliance which is done as a part of a CA.
What is the difference between condominium and cooperative society? Is condominium prepared by the builder instead of cooperative society can be accepted?
These are under the cooperative laws. Condominium isn't generally followed in the commercial because cooperative societies are generally the best form of organization for the residential housing societies per se. So this is on the cooperative acts part, not from the Rera perspective.
Form 2 should be wing-wise of whole project with respect to Form 3 made by CA.
Form 2 should be as per the Rera registration obtained. Rera registration, either you are specifying a particular wing, you are specifying a particular building, you are specifying a particular layout entirely. For each layout, there are 10 buildings are there, 10 buildings you need to provide it out, the completion and everything.
How do we know about the details of other allottees in the project if it is not uploaded on the Rera details?
Search report, you can go as an or a search report, which is earlier the case was. And now it is made available. How effectively made available by the Rera authority, we will see, because it is now compulsory for everyone. It's like you can drop down the entire inventory which is available for sale.
Promoter wants to sell flats only after obtaining OC, whether Rera registration required. I think this answer is already.
We have already answered that.
Construction cost for rehab building is considered for land cost. What about composite building, whether sale and rehab in same building?
Definitely, you need to segregate out based on the number of units which are available for rehab and which are available for sale. And accordingly, you need to identify the cost.
So does Rera safeguards the existing members of the society, or if they are getting the free area and maybe they are purchasing some portion of area?
If they are purchasing some portion of area up to that extent, only that member.
Extent, yeah. Is there any softwares available for Rera certificates?
Nah, not as of. Pratikji, we can have the small session for the self-redevelopment by my associate, Mr. Nilesh, engineer Mr. Nilesh Shah, who can give a presentation on the self-redevelopment, way to successful self-redevelopment, approach to the successful self-redevelopment.
Okay.
and where he can highlight what are the critical aspects for any sort of self-development to get, which are the more interested from the Rera, because all stakeholders are there for the real estate perspective. So there is a small presentation which has been prepared by the associate and the director,
Okay.
Mr. Nilesh Shah. If you allow half an hour time, we still have it. We'll be able to conclude it.
We'll just take 5-6 more questions and then maybe we can start with it. So certificate says I hereby certify means certificate has to be issued and signed in individual capacity and not in the name of the firm.
Not necessary,
Not necessary.
because the who have been appointed is more important, either a firm or either individual.
And percentage completion is CA certifying form without form 3 being uploaded. So CA is certifying form 5 without form 3 being uploaded by the promoter on Rera website. Is it right?
The appointment, how you are doing? Appointment just mentioning on the website, or you have officially appointed? You are not mentioned on the website. It means the only appointment, there is no formal appointment per se. Okay, once you accept the form 3. Now form, earlier there was no provision on the promoter to accept it out any form 3. Okay, now if you see that the last page, there is a form 3 which is there, need to be accepted by the promoter. Once the promoter is accepting, yes, I am accepting you as a form 3 certifier. There is no separate procedure for appointing have been identified by the Rera.
If there is a name change of promoter and the agreement is executed in the name of company A by the allottee and the name is changed to company B, what are the consequences of name change for the allottee?
Nothing, because it is as per the Companies Act or whatever the governing body is there.
If developer wants to amend the plan where existing member given possession prior to 1st May 2017, does developer require to take consent of the old member?
Now if possession has been given means what? Either you're taken a part OC or it is a part of a bigger layout. Might be those two scenarios only. If part of an entire bigger layout, then your project is complete. Your project or your part have been received an OC. If you received an OC, you can't make it out because that is not the part of my Rera registration. What I will be making a Rera registration only for the new projects, which is an ongoing after the date of that particular 1st May 2017.
So maybe there can be, I think a member is trying to say maybe after receiving OC, again he is getting some sort of additional FSI to construct.
Now there are litigation which is going, why you are not getting your conveyance? Fight on that litigation. Why you are not getting your conveyance within a 3 months time, which is from a day one? Because once you get the conveyance, that fight of sharing the FSI will go away, which is a 99% cases in terms of an MOFA.
Okay, sir. So almost most of the queries have been addressed. So I'll request Vijay sir to just.
Yeah. Thank you, Pratik, for asking the questions. Since there are no more questions, and sir, your friend is there now?
Yes, on the same login, same thing. Mr. Nilesh Shah will be there.
Okay. We have around 20 minutes for him.
Yeah. Okay.
So he can continue.
Yes. It's visible now?
Yes, sir.
Yes, sir, but not the entire window.
It's visible?
Yeah, it's visible. Just try to just press Control and L. Maybe it may work, and you can have it on an entire window. Control L.
It's in, I think so, PDF mode.
Yeah, it's
So-
in PDF only.
So
Just just use a shortcut key Control L. See if it is working. Yeah, that's fine.
I hand over charge to Mr. Nilesh Shah
Yeah.
to take on this presentation for a self-development.
Hello, good afternoon to all the esteemed members of this association. Yeah, my name is Nilesh Shah, and I'm a civil engineer by profession, and currently looking after the redevelopment projects and also taking ahead the self-redevelopment. Okay. Now, these are the simple things which you all must have already gone through. Almost all the members must have gone through this. Okay, what is the self-redevelopment? So basically, the redevelopment that you do on your own, the society does on its own, is called as the self-redevelopment. It does not appoint a developer, but it appoints a PMC or a project consultant to take care of all the technical and the financial aspects of it, including the sales and marketing also. PMC is now responsible for taking society through the process of redevelopment. Feasibility working is done. We'll discuss all this in details in the further up slides. Okay. Now, what is the difference between redevelopment, that is builder-led redevelopment, and a society-led redevelopment or self-redevelopment? See, in builder-led redevelopment, there is no control over development, as developer does everything, and he may give all the aspects or he may not give. He may not inform you. But here in self-redevelopment, the society has complete control over the development. Second is, society is not aware of the major aspects of project. In builder-led redevelopment, here society is aware of each and every aspect, because they themselves are the promoters of self-redevelopment of their own societies. Now, bank funds are taken by both, even developer takes, even the society takes. Nowadays, bank funds are not available. So we can say funds from the finances. Okay. The funds are available to the society, but under the current scenario, uncertainty of project completion, so there is possible of flats being delayed, handover delayedly by the developer. But here in self-redevelopment, everything has to go as per the time. So there can be no delays, and ample funds are available. And bank policy, though we'll not talk about it because it is already now gone. There are advantages of self-redevelopment. Members get the opportunity to finalize design options. Society has complete control. Society has to coordinate with the professionals like us, who will take care of all the other things like contractors and purchases and everything. Society can go for the best material available in the market at most economical rates, because there are many people involved in this. I mean, you in your own society can have one of the suppliers who can help you in getting the best rates in the market. Society can select good and reasonable contractors because everything is on the societies only. Next is society is in full control of its finances, so the project completes on time. Funding can be arranged through financiers or it can be through self-funding. Societies who can arrange their own funds get more profit, obviously. And societies earn profits either in terms of getting more carpet area or more surplus. Because in self-redevelopment, there is no word such as corpus, there is surplus. Okay. And this can be kept as an for making interest and making the maintenance free for the members. Important aspects of self-redevelopment, this again can be discussed. Financiers can ask for mortgaging, sale flats against the loans. But most important is there has to be 100% consent of members, as there is no scope of opposition. Since receivables in terms of individual carpet area and surplus are much higher than the developer's offer. In short, society is earning the profit by the way of developer. Here, members have to be united and take collective decisions. 100% transparency is required to be maintained. There is no scope for any self-interest in self-redevelopment. Trust is an important factor among all the members. And efforts for coordination and follow-up with all the consultants has to be taken up by the society with the help of project consultants. Okay. Now, again, I'll share some self-redevelopment processes and everything in details. So here, society appoints project consultants as they have the capacity and the team to carry out all the activities of the redevelopment. Now, the process of self-redevelopment, the first point is that a feasibility has to be prepared. And this feasibility will help in finalizing all the terms like getting extra area, the surplus fund that can be available. I'm not saying it can be freezed, but it depends on the final figures of the accounting and the rent to all the members. Then second step in this process is to get provisional approval for loans or funds. So this is a challenge right now because earlier Mumbai District Cooperative Bank used to give self-redevelopment loans, which has been stopped now. So with the societies, there are two options. Either they can go in for self-funding, where the society members can chip in their own funds for approvals and construction of new building, or private finances can be arranged who will fund the project in return of either interest on funds allocation or new flats at concessional rates in the redeveloped project. The rate of interest or the concession that they may demand can be known at the time of negotiations. Third step is getting the planning and designing of the project done. Here, the licensing architect and design architect will together finalize the project designs as per the norms set in DCPR 2034, that is Development Control and Promotion Rules. The same will be discussed with the societies and will be finalized. Once the design of the building is finalized, it will be sent to RCC consultant for RCC designing. Fourth is apply for IOD from approving authority. So same thing, once this designs and everything is finalized, we have to bring on board the RCC consultant and the licensing architect. We have to bring them on board and they will apply for the IOD from either BMC or Maha or SRA, whoever is the approving authority. So, and IOD is basically termed as intimation of disapproval. Here, what happens is the approving authority first gives if the following NOCs or the points are not covered, the CC cannot be given. So that is why it is called as intimation of disapproval, that following are the points because of which the disapproval can be given for the project. So it is an intimation, that is, everyone knows it is called as IOD. Next is obtaining IOD and vacating premises. Once IOD is received, all the members of the society will start vacating, taking the rents and going out on rents. And after vacating the building, the demolition starts. The members will be required to shift to alternate rented places for the same PAAA agreement, that is PAA agreement, permanent alternate accommodation agreement will have to be prepared, which will be done by the advocate solicitor of the consulting project consultants. Once raising of old structure is completed, the project is eligible for commencement certificate. Meanwhile, licensing architect will clear all the objections put forward in IOD and will go ahead obtaining the CC. Get further approvals for project and Rera registration. Here the Rera registration will be done once CC is received, and balance approvals and NOCs will be obtained by the other consultants in coordination with the licensing architect. Then preparation of tenders and finalization of contracts. Once CC is received, we can immediately start the work. That is the RCC work. We can start with footings or pilings or whatever design has been finalized by the RCC consultant. And tendering has to be done and contractors to be finalized. PMC wing of the project consultants will take over this procedure, keeping the best practices of judging the contractors through various parameters along with the members of managing committee or redevelopment committee. Next step is execution and completion of project. PMC will be responsible for execution from start to end. They will ensure speed, quality, coordination of various agencies and consultants, material procurement and its quality, workmanship of various contracting agencies, and above all, it will take care of the timely completion too. Once the process of construction starts, Rera registration is done. The saleable flats, the additional flats, which are not to be, which are under the sales team will start, will ensure the timely sales and marketing agencies, thereby generating funds for the project. And so once that fund generation starts, the finance required will be less, thereby saving on the interest cost. And together with that, obtaining the final NOC and occupation certificate. All the final NOCs like CFO, traffic, stormwater drain, water department, sewerage department, lifts, rainwater harvesting, electrical, plumbing, etc. will be obtained. And once all these are obtained, we can go in for occupation certificate. And getting the occupation certificate, this marks the physical completion or the technical closure of the project. Once the OC is received, we can hand over the new flats to existing members and the new flat purchasers in their new building. Okay, and one thing that remains, that repayment of loan, handing over the balance finances to the existing society, and financial closure is done. The loan repayment process will be completed here, and this will be the final closing of the redevelopment project. Okay. Now, this was the normal process of redevelopment. Now, if you see this self-redevelopment, many of you must be knowing that it has not gone as successfully as it should have gone. There are quite a few reasons for that, and mainly we have certain external factors where the reasons are. We'll go one by one. From the society's point of view, how societies should approach to make the self-redevelopment a success. See, first and foremost, society needs a strong, neutral redevelopment committee with integrity. As I have already told you earlier, that integrity is a major factor which is lacking among the members of the society and the managing committee most of the time. So integrity is the most important part. Everything has to be opened and clearly discussed with all the members. Second is members have to be united, and they should give 100% members should give the consent to self-redevelopment, because here sufferers will again be the society members themselves if anything goes wrong. Okay. Now, members should understand the limitations of their redevelopment potential based on the feasibility prepared by the consultants and not ask for unreasonable stake. Most of the projects for years together are being held up because of this reason, that see, everyone wants more, but whether we are eligible for that is not being looked after. I have known projects which are stuck for years together, like 7 years. A project has been stuck. The building had gone in C1 category. It was demolished by MCGM. For last 7 years, the people are staying outside, and the decision of redevelopment is not being taken. Of course, there are other external factors too, but here people should understand. I know I have been working on one of the projects at Veera Desai Road, Andheri, and they were just waiting, thinking that once the metro comes, initially someone had announced that within 2 kilometers range, people will be having advantage. So they were waiting for that advantage for last 4 hours. And now the building is in such a condition that they cannot look here or there. They have to straight go for self-redevelopment, as developers are also not coming there. So waiting for something very good to happen, of course, it has got its time period. After that, it should be overlooked, and you should trust the feasibility prepared by the consultants, and you should go ahead with that. Okay. The members can get better deal if they prepare themselves for the future. Like when the society prepares for its repair works, they collect the amount in advance. Major self-redevelopment projects are stuck up because members don't have initial funding that is required. Any financer right now is not ready to come at the very initial stage, unless and until, of course, people have confidence, or the feasibility is very good, profit seems to be very good. Only such projects are taking off. Otherwise, the projects are not taking off. So when you think that within a couple of years' time, if we have to go in for redevelopment, don't just rely on the financiers or on the developers. You can start collection like you collect for the repair work. So once, if you have the funds with the society itself, like we say, the expenses up to IOD or CC, which is not a very big amount. It can be as much as this repairs work, like 50 lakh or around 1 crore. If it is collected and if it is with you, then you go in for IOD, and then many people, all the financiers, all the developers will be ready to come in and do the balance works. Okay. Next is consultants for success. About successful redevelopment, what type of consultants you should select? The right consultant selection is necessary for self-redevelopment. Consultants should be well versed with all the development control rules, that is DCPR 2034. Consultant should have a full team to cover all the aspects of redevelopment. Consultant should be capable of garnering required funds so that the process of redevelopment is not interrupted. Good project management team, PMC, is the biggest strength of any self-redevelopment project. PMC should raise red flags well in advance to avoid minute interruptions. Consultant should be interested only in his agreed fees and consultant should have a strong team of contractors. Next is external factors that are holding back the self-redevelopment. First is banks and financial institutes have not yet come up with their financing policies for self-redevelopment, even after almost a year of government announcing them permission. The rules of the game are not defined, so it is up to the private financer to fund the project. It depends how what he quotes and how he finances. Government policies are ever changing in the current scenario. There are good phases. There are phases when good policies are announced in short period of time. If this is adopted in time, if the society has the finances available with them, initial finances, they can enhance the profitability or the feasibility. Like if you know that last year in 2021, government had announced 50% discounting in most of the premiums that are to be paid. This and many projects are registered because of this scheme. The ideal team of consultants, as we say, it has to have a good project management consultant team. Licensing architect has to be there. Project management team is team of project managers, engineers, supervisors, purchasers, managers, estimation engineers. I'm just rushing through because of the shortage of time. Licensing or municipal architect, he'll be taking care of all the approvals. Then design architect, he'll be taking care of the designing building internally and externally. RCC consultant will design the RCC, that is steel and concrete required and to make the strong building. Then advocate solicitors will be required for the projects to prepare different type of agreements with flat purchasers or contract agreements. Chartered accountants for the project will be required to look after the finances. Rera consultant, as our friend and my colleague has already told you in detail, Rera consultant has to be required. Sales and marketing consultants will be required. And there will be other consultants like firefighting, surveyors, MEP, lift, geotechnical consultants who will prepare the drawings, designs of those individual parts, individual activities, and they will get the NOCs from their respective departments also. Since all are here are the CAs, I'm just presenting a small breakup of self-redevelopment cost breakup. I have done quite a few feasibilities, and I have selected some 3 feasibilities in different areas. One is from Kandivali, one is from Santa Cruz and Khetwadi, and where ready reckoner rates are also given, and approximate cost per square foot of carpet area is being reflected in this. And the percentage wise, if we see the cost of construction, including GST, comprises from about 35 to 45%. Payments to government, like for TDR, government FSI, fungible FSI, and other premiums and out-of-pocket expenses, come to around 27 to 32%. Expenses towards the member, that is rent and shifting charges and other things, comes to around 6 to 9%. Finance cost, that is interest on the finance that we take, comes to around 10 to 15%. And other expenses like the fees of the consultants, miscellaneous expenses and other things come to around 10 to 15%. Now, these are approximate indicative costings, and costings vary from project to project depending on various factors like road width, size of the plot, etc. There are also other things. If there is an odd size plot, there can be more open space deficiency premium that has to be paid and other things. Just rushing up. Thank you very much.
Yeah. Thank you, sir, for taking the session on self-redevelopment. Today's session was superb session by 2 eminent speakers. One was Rakesh Oza ji and second one was Nilesh Shah. Rakesh sir has covered the recent developments and compliance aspect, what a chartered accountant has to know before he venture into that area. And since now most of the audit has gone, companies audit will be going, and GST audit has already gone. So this is a new area of practice for the chartered accountant. And if the member has gone through today's session, they can definitely start practicing this new area. Now coming to the pleasant task of proposing a well-deserved vote of thanks. Sir, we are indeed thankful to you for sharing your presentation, for giving your time. You have answered all the queries which are asked by the participant. On behalf of Borivali Central CP Study Circle, I welcome a hearty vote of thanks and request the members to carry out with a loud applause.
Thank you, Rakesh.
Thank you, sir. Thank you. Thank you.
Yeah.
Thank you, Rakesh bhai. Thank you, Nilesh bhai.
Thank you, Nilesh bhai. Thank you, Rakesh bhai.
Thank you, sir.